Welcome guys to another episode on the smart money concept trading model. Okay, so in today's teaching we're going to be looking at breaker block. So if this is your first time of coming across this channel, please do well to subscribe to this channel, turn on the notification bell to get notified when we upload our weekly content. Okay, so this series are still about the PDRA matrix. Okay, we are still making the separate series on it. Then when we get to the end of the series, we are going to bring everything together and in the order at which price seeks for it. Okay, so that was going to be at the end of the series. So in today's teaching we're going to be looking at breaker block. Okay, so let's get down to today's business. All right, now in today's teachings we're going to be making reference to a bullish trend. Okay, we're going to look at both actually. So as you can see, we have a support level or anticipated bullish institutional reference point. Okay, so this could be it could be a fair value gap, it could be a bearish order block, or any institutional reference point. Okay, higher time frame reference point. So now as price drops down into it, as you can see, we have price reaching for this. Okay, and as you can see right now, price dropped into our higher time frame support level. Okay, so now when price dropped into this, okay, this is just an anticipation. Okay, we are just watching price because this could just be a break of structure. This could be many things, right? This could just be a break of structure and a continuation to the downside. Okay, this could just be this can as well be a run on liquidity to take out the sell side liquidity resting below this old low. Okay, so we don't know that for sure until we have a potential shift in market structure. Okay, right now we are just seeing that price has just traded down to a support level and we are watching out for our breaker block. Okay, we are watching out for our breaker block. Okay, so now as you can see, we have price reached into our support level. Okay, and created a kind of a kind of bounce off. Okay, did a little bit retracement. Okay, which made it look like it was actually testing tick support level right here. Okay, so this right here is kind of looks like a break and retest, right? A break and retest. Then the sell stops that were resting above below this old short-term low were activated, right, and already been sucked into the marketplace. Okay, so then when we had this little reaction, price eventually broke structure to the upside. Okay, so now the question is, now where is our focus? Okay, where is our point of focus right now, having the shift in market structure? Where is our focus? Okay, so let's get the answer to that. Okay, so now we wait for price to come down into that old high. Okay, so this is our point of focus. Okay, so when we have this shift in structure to the upside, okay, when we have this bullish shift in structure, that is where then we are sure that our breaker is coming into play. Okay, that is where we can start looking for our breaker, right? Then what the next line of action is, we wait for price to come back down into that old high. Okay, into this particular old high, because this is our point of focus, right? Immediately we have our shift in structure, this is our point of focus. Okay, so now when it trades there, we view that as real support, because there's going to be orders inside that high that will be looking to be mitigated. Okay, so now in other words, what's the storyline behind this? We had a short-term low, right? We had a short-term low right here, and we had a break of structure to the downside. typically there's going to be set stop resting below this old low, okay, and they were tapped in short, okay, they were tapped in short, and this actually came back as, you know, a break and retest, okay. So we had this, and there are going to be probably some retail traders that are going to look at this as a break and retest, and they're going to place more sell in the, they're going to place more short position, right? Then eventually we had this move, okay, we had this move, and those that left, those positions that got activated down here, okay, they are going to be left underwater, or in other words, they're going to be running in losses, okay. So what the breaker is actually is the breaker is close to the mitigation, because the mitigation, because the positions that are running in losses below here, okay, the large banks, they are going to look to take off those positions as price trades back into this old short-term high, okay. So this right here can be viewed as a real support level, okay, because we are now hoping on smart money taking out large fund retreat traders, okay, hedge fund managers, retail mindset traders that has large pockets, right? Most of those hedge fund managers that don't trade with stop loss, okay, so they are going to let this run as price expanded higher. They let it run in losses, okay. So these positions were, you know, these positions were still open and in losses, okay. So as price expand higher, they are going to, you know, wait for price to come back so they can mitigate the losses, okay, and place more, and, you know, join the under the current trend, okay. So they are going to take out their sell position right here and place more buy position to create a higher price leg, okay, to create a price higher, okay. So now let's go down deeper. Now as price moves away, that confirms the breaker, okay. So as when we had this retracements eventually, as price expand higher, this confirms our our bullish breaker block, okay. So that is just that. Now let's go down further, let's look at it in more details, okay. So now, confirmation of a breaker block. How do you confirm that that this is a breaker block, okay. So now the first thing is that a low has to be traded below in form of stop runs or liquidity run, okay. So for us to know that this is a breaker block forming, okay, or a potential breaker block could form, okay, at any given time, okay, at a particular level, we have to have there has to be a run on sell stops, okay, in terms of bullish breaker, okay, in terms of bullish breaker, okay. So we had this old short-term low, right? Then we had our institutional anticipated bullish institutional reference point down here, okay, our support level down here that price is potentially reaching for, right? Then we had price drop down, create this short-term low, gave a little retracement, and, you know, traded below this short-term low, okay. So that is the first criteria, right? That is the first criteria. Now once we have this, our point of interest, we focus our attention on the short-term high that is in between those two lows, okay. In other words, when we have this low, okay, we'll focus our short when we have when we have a run on liquidity, a potential run on liquidity, because this could be just a break of structure and price can just retrace and continue going lower, okay. So we don't know if this is a run on liquidity or a stop run, okay, until there's a shift in market structure, okay. So when we have these two low, when we have a low that goes below the another low, okay, that has that creates a potential liquidity run, okay. So this is not a liquidity run until there's a shift in structure, right? So we have these two lows, between these we have these lows right here, okay, the highs, okay, we have this particular high, the short-term high that broke the structure to the downside, right? And as you can see, price reached our support level, okay. So our point of focus will be on this high, okay, will be on this high, right? Will be on this high. We wait until price takes out this high, okay. So as you can see, price created this short term, and so once we have this expansion, attention, our focus will come to this particular high. Okay, once this old high is taken out, then we can anticipate our, we can take our attention to this old high, right, for a retest. Okay, for a retest. All right, so now for a bearish breaker, right, for a bearish breaker is just a, the other way around. We have to have a confirmation of a breaker block. We in this case a bearish breaker. Okay, a high has to be traded above. Okay, so we have this old high, then we have this run above it, reaching into our anticipated bearish institutional reference point. Okay, this could be a bearish order block, an old fair value gap, an old high be run above. Okay, it could be anything that creates, that forms a institutional reference point. Okay, a resistance level. Okay, so we have this. Now remember, this is just a potential run on liquidity. Okay, this is not seen as a run on liquidity until we have this short-term low taking out, right? Because price can just, as it creates this short-term retracement, it can just continue going higher. Okay, so we wait. Okay, we wait for price to show us that this is really a run on liquidity, right? Then as you can see, we have price reacted off the resistance level, gave a short-term bounce and broke structure to the downside. Okay, so now once we have this, our focus is on this old short-term low, right? Then once price trades back into this old short-term low, this is known as our bearish breaker. Okay, so this is known as our bearish breaker. Okay, we focus on our attention on the short-term low that is in between those two highs. Okay, that's in between those two highs, and in other words, that's in between this high and this high. So that is this short-term low. Okay, so in this other one, we'll focus our attention on the high that is between these two old lows. Okay, this low and this low, this is the high between it, right? Okay, so this is the low between these two highs. Okay, so we'll focus our attention on this. So when price trades back up into it, this is known as our bearish breaker. Okay, so now we can anticipate, and this gives us a sell entry. Okay, this can be viewed as a sell entry. Okay, we'll look deep into definition as we go further. Okay, so now the proper definition of it. Okay, so a bearish breaker block is a bearish range on down close candle. Okay, it's a bearish range on down close candle. In other words, this low, at this very low, we are looking for breaker block is going to be a down close candle. Okay, before the run on liquidity. Okay, before the run on liquidity. Okay, we are going to see that as we go down further. Okay, so close the down close candle in the most recent swing low prior to an old high being violated. Okay, so from this diagram, what is the most recent swing low prior to this old high being violated, which is this. Okay, so this is our point of focus, right? The buyers, what actually happened right here is that the buyers that buy this low, okay, that bought this low, right, that bought this low and later sees this same swing low violated. Okay, they saw it right here being violated, right? We look to mitigate the loss. Okay, we look to mitigate the loss. Okay, so when price returns back to the swing low, when price trades back up into this particular swing low, this is a bearish trade setup worth considering. Okay, so now this is a bearish setup worth considering. So the old high being violated right here, this, like I made mention earlier, this is just a potential. This is not considered as a breaker block until we have this shift in structure. Okay, because this could just be a potential. In other words, this is not viewed as a run on liquidity until we have this market structure shift. Okay, because this could just be a high. Price could literally create a higher low and continue and create another price leg higher. Okay, until we have this shift in structure before this can be viewed as a valid run on liquidity. Okay, so let's go down further and look at it even in more detail. Okay, so now what actually occurred right here, what actually occurred in price right here. Okay, so we had buy stops resting above because the underlying trend is bullish, right? The underlying trend is bullish. So we had price create this low, create this high, create this higher low, right? And as price was trading up, typical retail mindset traders are going to have their buy stops resting above here, okay, to go long, okay. So they are going to be buying at high premium above here, right? So now when price trade broke this structure, this old high to the upside, okay, this was just seen as, you know, price creating a higher high, okay. So when this retracement was happening, we were not sure of it, okay. In other words, we were not, or we will just be watching price, okay. We'll just be watching price because this could just be a, you know, a retracement to create another higher price leg, okay, to create a higher low, right, and continue going up, okay. Then we wait, and mind you, the buy stops of the retail traders right here has been activated, okay. They have been paired, okay. They have been paired. Smart money has already sold to them, okay. Smart money has already sold to the buyers that are willing to buy at a high premium price, right? So as price drops down, this particular set of buyers right here that went long right here, okay, their orders are already be activated, okay. Then we have this shift in structure. We wait until this particular swing low is being taken out, okay. So now when price, the process of price coming back to, you know, to mitigate this, to mitigate the positions that are residing above here, okay, that were, you know, put in on this breakout right here, is known as this breaker as the bearish breaker, right? So the process is mitigation, okay, while the return of it is the bearish breaker, okay. So they are in the both mitigation block and bearish breaker are actually, you know, similar, but at the end of the video we are going to look at the difference between the both, okay. So as price trade backs up, this is our bearish breaker, okay. Smart money, or rather the retail mindset traders that went long are going to have to mitigate their losses. They are going to take off the position that's resting above here and, you know, place in more short position, which will eventually flood the marketplace with lots of orders and create liquidity for a new price leg downward, okay. So this is a bearish trend setup worth considering, okay. So going down deeper and looking at it even more and in more explanatory form, okay. So as you can see, the red on buy stops indicates buyers are trapped long, okay, just like I explained earlier, okay. Those that saw this as a continuation, okay, that wants to buy on a continuation, right? Buy stops order are simply for continuation kind of entry, okay. So the retail mindset traders that had their buy stops above here, okay, gonna get tipped in, okay. So now when price started, you know, retracing, when price started, this price started expanding to the downside, okay. So this retail mindset trader is going to probably see this as, you know, they're going to see this as just a retracement, okay. They are going to see this as just a retracement, and you know, most these hedge fund managers, they have deep pockets, okay. So most don't trade with stop loss, okay. So they are eventually going to, you know, be looking at this as price was going down, was expanding lower. They're going to look at it as maybe it's probably coming back to test this support level, right? Then eventually they saw a market structure broken down, okay. They saw market structure broken down, right? We have this. Then when eventually when this old low was taken out, okay, they are going to be like, okay, so repricing lower price after buy stops are taken, okay. So these are the clues that comes together when uh when a breaker block is being formed, okay. The first clue we have to see is we have to see a potential run in buy stops, right? In terms of a bearish breaker block, we have to see a potential run in buy stops. Then we have to see a repricing lower after buy stops start taking, okay. Price have to be, you know, the market has to be repriced lower, right? So in form of an expansion, okay. So that is exactly what we have right here. You can see the market was repriced lower heavily, okay. So those that went long right here, okay, that you're probably expecting price to just, they were just seeing this as a retracement, price coming back to test this support level, right? But eventually this support level got broken, okay. So market structure broken down, and retracement will be new selling opportunities, okay. So eventually when they saw this move happen, okay, when they saw this old support level eventually when they saw this support level give way, okay, they have to wait for, for price to come back and give them an opportunity to get out. Okay, so this is classic uh support turn resistance. Okay, so this is classic support turn resistance. Okay, so when price came back, they are going to take out the long positions that we are trapped up here. Okay, and go to put and go to news set or short setups, okay, short entries which is going to flood the marketplace with liquidity and send price, creating another lower leg to the downside. Okay, so these are just the three clues that comes together when a breaker block is being formed. Okay, when we are anticipating a breaker block being formed in the marketplace. Okay, so now for a bullish breaker block. Okay, so a bullish breaker block is a bullish up close candle in the most recent swing high prior to an old low being violated. Okay, so we have this swing high, right? We have price eventually price as you can see is currently on a downtrend, right? We had somewhere above here would be a low, a high, a lower low, which is this particular low, right? A lower high, a lower low. Okay, so this is a potential run on liquidity. Okay, so this can just be anything. This can just be a break of structure, and a short-term retracement might just literally happen, and price may just continue going down. Okay, so we are not sure of anything until we see the most recent swing high. Okay, sorry, the most recent swing high, okay, being violated. Okay, which is this. Okay, so now sorry, the most recent swing low, right? We already have a swing low being violated right here. Okay, so we have to see a shift in structure, right? The sellers that sold this low and later see this same swing high violated will look to mitigate the loss. Okay, when the price returns back to the swing high, this is a bullish trade setup worth considering. Okay, so when we had this short-term low, right, then we are going to have sellers that are going to have their sell stops looking to go short, right? You're going to be trading this as a continuation pattern, right? So now we are going to have sell stop resting below here. Then when price traded below this old low, those sell stops were activated and flooded the marketplace. Okay, smart money bought those sell stops, right? They bought from these guys. Okay, so now when price started at first it looks like a retracement, right? So it started retracing higher. So this retracement said hedge funds, large institutional banks are going to see this, are going to be looking at this as maybe price is probably coming to retest this resistance level to create a double top, right? So then eventually price broke this old high. Okay, so this is classical resistance turn support. Okay, so this classical resistance turn support. So when we see this, okay, when we see this break of structure to the upside, this shift in market structure, then we can anticipate price to reach back for this. We can then view this, our focus will eventually come to this old high as a breaker block. Okay, because those large hedge fund managers are going to look to mitigate their losses. Okay, they are going to look to close this current position that's running below this old low. Okay, these positions that are running losses, I'm going to look to take out those positions when price comes back to this old high. So this is classical resistance turn support. Okay, so this is how we trade with the idea of support broken turn resistance broken turn support, vice versa. Okay, so now when price return backs to this swing high, this is a bullish trade setup worth considering. Okay, so now going down further, looking at it, looking at the storyline more. Okay, so we have potential sell stops, right? we had this we have price trade below an old low. Okay, then this was just like a potential continuation, right? It didn't look like a run on liquidity. Okay, until we have this swing high taken out. Okay, which is a shift in market structure. So we have this swing high, as you can see, we have this swing high taken out right here. Okay, so when price comes back to this old high, this is our classic resistance broken turn support. Okay, so this is our bullish breaker. This is a buy setup, a bullish trade setup worth considering, because the large funds, the retail mindset, large institutions are going to look to take off those short positions, okay, that are running losses here. They are going to mitigate them and probably place buy setups. Okay, they are going to go long, and that is going to flood the marketplace with others liquidities, creating this price leg. Okay, so that is where we look to positions for our buy setups. Okay, so that is just that. Now looking at the storyline even further, what are the clues, when anticipating for a bullish breaker? Okay, the first clue is that we have to see a run on liquidity. Okay, we have to see an old low trade below. Okay, so what eventually happened right here is that the raid on sell stops, okay, indicates sellers are trapped short. Okay, just like I made mention earlier, we had this move below the old low, right? The sell stops that we are resting below these old lows have been tripped in. Okay, the pool of liquidity has been activated. Okay, so now price started expanding. Okay, price has to be repriced higher, right? Price repricing higher after sell stops are taken. Okay, so when this eventually happened and this resistance gave way, okay, so they are gonna the retail traders that went short here, they are going to look for opportunity to mitigate these losses, right? So market structure broken higher and retracement will be new buying opportunities, right? So when this happened and price comes back to this old high, this is known as our bullish breaker. Okay, so those retail traders are going to look to take off their positions and place in more buy positions. Okay, so that is where we look to positions our own entry as well. Okay, so now that is just that, looking at it in price action and reprice action. Okay, so obviously this is the current price action on the Australia dollar. Okay, or this is a 4-hour chart. Okay, as you can see, we have price obviously that was dropping. Okay, or rather we had this consolidation, we had this expansion, then we had this run on liquidity, right? We had this run on liquidity, and we have this shift in market structure. Okay, so this is our shift in market structure, and this is what is referred to as a breaker block. Okay, so this is what is referred to as a breaker block. The last up candle, this is a bullish breaker block actually. Okay, so the last up candle before this down move that took out liquidity. Okay, so this is the high, the short-term high, right? That that is between this high and this that is between these two highs, right? That's between this high and this low. Okay, so this is the short-term high that took out liquidity, and as we can see, we already have our shift in market structure to the upside. Okay, so this is our retracement. So this is a buy setup worth considering. Okay, so I've already marked this out as a point of interest, and I'm going to be watching price, expecting it to create a higher price leg up. Okay, so I'm expecting some mitigation to happen right here, and probably a buy setup opportunities, a buying opportunity to occur right here, and look for these old highs. Okay, run on this old high. Okay, so that is just how it looks like in price. Okay, even looking at it further and considering the range. Okay, looking at it with our fib, you can see we are currently below equilibrium. Okay, we are in the discount side. Okay, so it's more fair enough to to be looking for buy setups. Okay, so that is just how our breaker block looks like. Okay, so for a bullish breaker block, that will be the last bullish candle before a down move and run on liquidity. Okay, for a bearish breaker, that will be the last down up close candle before a run on buy side liquidity. Okay, which is the last bearish candle, if I'm not mistaken. Yeah, it should be the last bearish candle, because for a bullish breaker block is the last uh up close candle before the down move. Then for the bearish is the last down close candle before an up move. Okay, so now that brings us to the difference between a mitigation block and a breaker block. Okay, so the mitigation block comes with the way of a failure swing. Okay, mitigation blocks come with a way of failure swing. Then the breaker block comes with a way of run on liquidity. So a mitigation block is a failure swing, comes with a way of failure swing. Okay, so there is no run on liquidity, it comes with a way of failure swing. Okay, the breaker block, there has to be a run on liquidity, there has to be some old low taking out, a shift in market structure. Okay, so that is a breaker block and this is a mitigation block. Okay, so that is just the difference between the two, but they both are, serve the same function. They act as mitigation. Okay, they act as orders being taken out. Okay, they act as orders being, mitigating. For a mitigation block, those that probably, so in terms of this bullish, that suit this short term rally. Okay, that suit this short term rally, and eventually when this old short term high got violated, they are going to look to take out their orders. Okay, so then those that suit for a breaker block, those that suit this, that at their, set stop resting below here. Okay, so for a breaker block is actually a run on liquidity for those looking to, trade the continuation pattern. Okay, then for those that, that saw this, maybe quick scalpers or thereabout, that saw this price leg, that sold this short term rally. Okay, that is just the difference between the two. Okay, so that brings us to the end of this, and I hope we have found this video useful. If you are if this is your first time of coming across this channel, please do well to subscribe, turn on the notification bell to get notified. Okay, remember we always have our Telegram group link, is attached to the description box. Okay, the purpose of the group is, if you have question or you are confused about any area at all, okay, you drop your question in the group and we will answer to you personally. Okay, so that is just that. Okay, so thank you all for joining us today, and do have a great trading week and a great trading week ahead. Okay, see you guys in the next episode.